And this is Real Estate Underground.
Greetings and salutations, Real Estate Undergrounders. This is Ed Matthews again with the Real Estate Underground podcast. Thank you so much for joining us today. Today is an interesting conversation because, it's something that I've heard about and I think I know what I'm talking about, but I'm probably not an expert, right? And so Mike Hardy with the Cirrus Opportunity Fund has agreed to join us and educate us on the wonderful world of opportunity zones, as well as we're going to get into tax opportunities and a whole bunch of other things. So Mike, welcome to the show and thank you so much for your time today.
Absolutely. Ed, thank you for having me. It's a pleasure to be here. I look forward to our conversation.
Yeah, this is going to be fun. All right. So, you and I have been kind of going back and forth for a little while, and I stalked you on your website and LinkedIn and a few other places. So I know who you are, but why don't you explain to the other three people that are listening to this podcast? No, I'm kidding. Who you are and what your story is all about. How'd you get here?
Yeah, absolutely. I'm first a husband and a father, married 26 years, and four kids that range from 21, 19, 16, and 14. So it's a circus at our place at all times.
Yes, it is.
Getting used to having two adult kids and two kids that are still needs a healthy amount of parenting.
Right.
But I love real estate. I love numbers. I love people, and anything that is a mix of that combination is just a sweet spot for me. So
awesome.
I'm a serial entrepreneur. My early memories of making money, I lived in New York and Connecticut, and I figured out that I could shovel driveways for my parents first for make a few bucks, and then of course the entire neighborhood and mowing lawns. So I've always looked for ways to be able to save and then understand this world of investing. So
snow removal.
Backstory.
Yeah, awesome. So snow removal and landscaping tycoon to a world-class mortgage broker, and now a managing partner of a really interesting opportunity zone fund. So obviously being a serial entrepreneur, you could probably do a lot of things. I mean, I strongly suspect your skill set is pretty broad and probably pretty deep too. So why pick real estate as the the vehicle that you were going to make your way?
I believe that we only live once, and so it's important in my mind not just to do well financially and to build wealth, but to do it in a way where it is fun and fulfilling and aligns with strengths and passions and interests. And so I think real estate's amazing for a number of reasons, but from a personal fulfillment standpoint, people, numbers, and real estate, and just how that all fits together, and the inefficiencies that exist and the creation of value. Yep. There's just something super fulfilling about seeing something that can be improved upon, whether that is a person or whether that is in real estate. There's just the opportunity to bring life to something.
Absolutely. So you're a builder, right? Builder of people and a builder of businesses. I got it. All right. That's awesome. And so, when you started to kind of look at now, I know you were in the mortgage business for quite some time. I think you still are. And now you're in the real estate investing business. You've been doing that for a while. So let's talk about your focus in terms of the Opportunity Zone Fund. What is so attractive? And these are self-serving questions because I want to know. So, what is the Opportunity Zone all about, and why is it so darn attractive?
Yes. So the Opportunity Zone is something, I'll tell you the story of how this came about, because it was really serendipitous of how this happened. And I've been I am in the mortgage business. I've been in the mortgage business for 20 years, and a partner with Churchill Mortgage for the California, Nevada marketplace. But I've been real estate investing and various projects for about 15 years as well. So I find that there's a very nice, neat overlap between the two. The businesses actually complement each other very well rather than a distraction. But I was the chair of a financial advisor network for Azusa Pacific University, local to me. And we were doing some forward-facing education for CPAs, financial advisors, real estate professionals, and on just different creative ways of being able to build wealth. And so we're covering the 1031 exchange, the 721 provision,
Yep.
charitable major trust, DSTs, and then there's this new kid on the block called the opportunity zone that was out.
Right.
And so we had experts for every area, but we couldn't find one for the opportunity zone. This is I don't know, 4 years ago or so.
Okay.
Long story short, I said, guys, I'll do the talk, but I'll do it as an interested investor, and I'll take a smaller section, disclaimer, not to be disingenuous, but I was really curious about it. So I had to saturate in the tax law for about 3 weeks to a month to prepare.
Yeah.
And so the
Best way
whole
to learn
time as
something.
I'm thinking, this seems too good to be true. How is it possible that this is allowed? And it makes perfect sense. So I'll kind of give you the broad strokes, but that's how this came to be. It was by accident. And, I come to find out that all of the ultra elite and wealthy, they're doing this. Like, this is a common practice with family offices and sort of the, very high-end institutions.
Yep.
To be able to mitigate, capital gains, take care of the strategy. But rarely does it kind of make its way down to Main Street, so to speak. So anyway, that's kind of how all this came about, was just looking and thinking bigger and thinking different and taking the time. So that's the backstory. I thought it was interesting because, and I realized that I can solve my own pain. And in doing so, that there's a lot of other investors that are maybe just kind of above mom and pop.
Yep.
That don't know this exists and realize, oh my goodness, this can be, if done right, the combination of tax mitigation and then compounding and tax-free exit, which I'll explain in a minute, it can be a huge difference in the wealth building for somebody. So that's the backstory to this.
Yeah, that's amazing. So, like I started to say, the best way to learn something is to approach it as if you have to teach it to someone else, right?
Right.
And so it's certainly helpful. All right, so let's get into this. Let's roll up our sleeves and get into opportunity zone. Exactly what is it and how does it work?
Yep. So this is created as part of the 2017 Tax Act, and it was a designation to create these different areas of the country that are typically the lower income areas.
Yeah.
And designate them as, quote, opportunity zones and then create some amazing tax incentives for investing in that area to attract money and capital into areas that typically wouldn't have that level of influx of investment.
Yeah.
And so it's brilliant in concept because it gives investors a very significant tax advantage, which I'll talk through in a minute, but it also attracts capital and it brings up, the base and just improves the entire area. So the thinking is the lower 20%, and each state gets to designate where their opportunity zone areas are. So they're able to say and map this out. So on our website, for example, cyrusozfund.com, right on the front page, you can go and see and plug in an address and see if it happens to be in an opportunity zone or if it isn't. And it's shaded, so it's really easy to tell. So, but the tax advantage, so for an investor, I'll walk through like what this means for an investor. And it's an ideal solution for somebody that may have a busted 1031 exchange. But for an investor, if somebody has capital gains, and it doesn't have to be real estate, it can be any capital gains, securities, can be art. I mean, it doesn't matter. Capital gains, they have the ability to move the gain portion of a sale. If it's real estate, let's just say you've got your basis and your gain, but the gain portion can get moved into a qualified opportunity fund. It's called a QOF. And this fund then is able to, which is what we've established, the fund then has to invest in the opportunity zones. But for the investor, when you invest in a QOF, qualified opportunity fund, a couple of advantages happen. Number one, any capital gains tax that would be due is deferred until April of 2027. Okay, so you've got a deferment. The best advantage far and away is that all of the growth that takes place in that fund, as long as it stays in a QOF for a 10-year window, and you can exit each year. There's if you need liquidity, there's options, but as long as it stays invested, all of the growth will then be eligible to exit tax-free, very much like a Roth IRA.
Wow.
Like mind blowing. And so where is, I mean, there's limits obviously to where there's options to have money grow and compound and exit tax-free. So to be able to have this as an option, to be able to defer for a while, and then all of the growth exit tax-free, when you run the spreadsheet and the numbers on this, it's just it's pretty exciting what that can mean for an investor.
Yeah,
It can shave years off of what somebody can build. I mean, if you look at our largest liability is our tax liability, if you
right.
majority of the time in any area. So to be able to have compounding growth and tax-free exit, amazing.
Yeah. So, it's interesting because, the fact is that, from an investment perspective, I didn't realize that you could take just the gain of a transaction. Let's say I sell an apartment building and I make $1, right? And my basis is $1, right? So I can take that dollar back, put it back into my business, and then take the dollar that was profit, capital gain, and hand it to a fund like you. And for 10 years, that gets to grow and hopefully turn into $2 and then $4, and we'll see after that, right?
That's right.
And then you pay taxes. I want to make sure I understand this part. So you pay taxes on when you collect that money at the end of 10 years. What portion of that is taxable?
Right. So all of the growth that takes place in that is going to be a tax-free exit. There is tax due. This is one of the complications, and we have a creative solution to it. But one of the complications is that the capital gains tax that would be due today is, instead of due in 2023, it's due in 2027. Okay. The
Huge win.
This program sunsets at the end of 2026. So any investors that want to participate in this, what I think is a once in a lifetime tax strategy, those gains need to get into a qualified opportunity fund before the end of 2026. Then it sunsets. Okay. Any of the capital gains, whether you move it into a fund today or whether you move it into a fund by the end of 2026, those are due April of 2027. Okay. We have set up the ability for an investor to margin loan, a wash loan against their contribution to 20% to be able to cover if they need a liquidity to cover the tax.
Yep.
So we wanted the investment, the opportunity to stand on its own. And I've set this up to really solve my own pain initially, and realized that I was doing enough projects and paying enough tax. And I was a financial advisor early in my year prior to the mortgage and real estate world. So I have some fund management experience. And so understood enough to realize that I can set this up in a way where it will significantly benefit my efforts and make it very streamlined for, other investors that are, have similar issues to be able to, participate in this opportunity.
So it's interesting. I mean, just the time value of money, right? Being able to defer for, 3 to 4 years, a chunk of capital gains tax, right? And then on top of that, being able to allow that to grow over that same time frame. Plus, seems like the math is, I'm sitting here calculating in my head that $1 that I would hand to a fund, and it gets very attractive very quickly. So I'm curious, the assets themselves. Opportunity Zone tells me that it's probably a pretty rough area sometimes, right? And so how do you manage that risk? And then secondly, how do the returns typically, right? We're not talking specifics, but at a very high level, how do the returns track relative to, let's say, multifamily as an overall asset class, figuring, 9 to 12%, depending on where you are in the world?
Sure. Nope. Great question. Fortunately, there's enough opportunity zones, and I'm in Southern California, and we have a little bit of a unique advantage because I know the areas that we're in very well, and then also have an existing 20 years of relationships of, real estate professionals that happen to bring us a lot of off-market opportunities. And so because we're kind of like above the mom and pop size, but below the Wall Street. So we have a really interesting niche where we can buy things that are, I mean, in my belief, and this has been my strategy for a long time, and one of the reasons I love real estate, to your earlier question, is there's enough inefficiencies in real estate that exist that if you have the right network and do the right research, the money's made when you buy. And so we're able to buy and start the game already at a very attractive position, and then work through a particular project. So we're careful about the areas that we invest in, and we know that we buy right. And then a lot of we do you know, we're building out a whole series of different townhomes, and are able to have a couple of different niches. One is we're able to buy, typically get the land rather inexpensively, and so we're starting from a very efficient place, and then we can build efficiently. And then, you know, our strategy is build to rent for, you know, the next 10-year window. I've spent countless hours in the research of understanding the demographics and the trends and how this market compares to '08 and sort of the tailwinds that we have of the millennials coming in, and then the post-millennials, the housing crisis, all the things I'm sure talked about fairly often. But a combination of, you know, build to rent, and then just the local intel that we have is really a competitive advantage. And then being, again, below like the Wall Street bite size and above the mom and pop, it's just there's so much inefficiency there. I don't think people realize.
It's the space I live in as well, so I couldn't agree more. So as far as the, you know, the returns and expectations, right? You know, we can wave off of specific numbers if you want, but you know, I'm curious, you know, if multifamily as an asset class, you know, on average, if you, depending on who you talk to, is, you know, 12%, let's pick a number, right? And, you know, self-storage is in that 16-17% range, you know, historically, right? So I'm curious, you know, with regard to opportunity zones, because you're buying so well, you know, one of the big challenges, I would imagine, and I'm curious how you manage this, is, you know, everybody talks about real estate and location, right? And so, you know, I was down in Nashville last summer, and I saw neighborhood after neighborhood after neighborhood being completely transformed, you know, to the positive. And, you know, absolutely gorgeous townhomes and apartment buildings and duplexes and build to rent type neighborhoods and all that. And it was really impressive, right? So I'm curious, from your perspective, what is, you know, what do you see as the opportunity relative to, you know, other asset classes? Is it same? Is it better? Is it less? Is it?
Sure. I'll walk you through what our approach is. And we've been running, even with the recent downturn and revaluations, we've been running 13.5% as the historical return from. So, and we were, you know, even a bit higher than that prior to you know, the last 2 quarters. So I like the model. I'll walk you through how I think. And this is a $1 million investor with a you know, rule of 72 and 116. So a 11.6% rate of return is going to be money will triple and exit tax free after 10 years.
Right.
So, and a 15% rate of return, money will quadruple. So $1 million investor, the way that we are set up with our game plan, and this is how I'm looking at it, and I'm a sizable investor in my own fund, is I want my money to somewhere between triple and 4x over a 10-year window and exit tax-free. If I like to say I'm a simple guy, like that's the game plan. 10 years, money triples, and if it quadruples, even better. And then with very contained risk, because we're buying right, we find highest and best for some of these smaller projects. And then we're able to do some, you know, pretty deep, heavy rehab, fix and flip projects. I've done those for many, many years. And so there's some that will fit the opportunity zone parameters as well. So between the combination of fix and flips and the build to rent and, you know, sort of where we find the inefficiencies in the market, we feel very comfortable that we've got very contained risk for returns that will, be a tripling to even, I'd be ecstatic for quadruple. I don't know. I approach things conservatively, but if you want to know my model, that's where I am. I want it to triple or 4x over 10 years and exit tax free.
That is impressive. Yeah, I'm not going to lie. We're going to talk about this after we hang up on the show. So as far as the way that you approach your business, and I'm curious. Obviously you are an accomplished entrepreneur. I'm curious from your perspective. What separates guys like you and your peers from the folks that are, we were talking about it before we started, right? The folks that were, stop you in the grocery store and say, man, I wish I could be in the business you're in, that I could do what you do for a living. And so I'm curious, what separates you from the people I love to call dreamers?
I'll tell you, I grew up poor, so I have a really interesting perspective. I've had to work for a lot of things in life, and I remember some of my early memories where we were living in a mobile home that me and my two younger sisters had one small corner with the bunk beds and the side bed, could barely fit in there. My folks were in the other end in this little hallway. And so, and then my dad was going through school. He was getting his PhD and ended up doing really well in life. But I got to watch a transition from having very little money to then him being very well off, but a healthy discipline that went with it, and a healthy work ethic. And so it's just something that's it's been ingrained in me. So what I was able to realize is that I'm a believer of this, that there's so many opportunities that exist out there. Part of my challenge for a while was trying to do too many things at once and being mediocre at a lot of things. And I learned this, about 15 years ago, fortunately, and then got very, very focused. But I think part of it is some people I don't know, we kind of live in a microwave mentality where people just expect there to be results. And for me, it's always taken way more work and longer than I had wanted or hoped. Right. But what this is the saying, I don't remember who said this, but it was one of those sayings where, over the first year, usually it's twice as expensive and you get half as far as you thought. But with focus and intention and compounding, when you get to like 5 years, all of a sudden now you've started to turn and scale up. Right. And I don't know that most people have the discipline or have it modeled to them, that sometimes you just got to grind for half a decade. And that seems to get lost somewhere along the line. So I don't know. I am a believer that we are always 100% responsible for our results. And I think sometimes people can take on a victim mentality rather than one of, I will find a way to win, even if I have to fight for it. And so that's my approach.
Yeah, that's profound. The fact is that everybody, you, me, folks listening, everybody, are exactly where they are because of the choices they've made. Right. Period. End of story. And so, deciding that you're going to grind, to use your word, is something that I think is kind of rare in this world, right? Because I've seen so many people, peers, friends, folks I met through the industry or outside the industry, that were almost there, and then they stopped and went and did something else. And had they just pushed a little bit more, they would have gotten where they were looking to go. So perseverance is certainly a very important attribute.
I've learned, had a bucket list to do an Ironman, and I did an Ironman a number of years back. And one of the lessons from that was, and this is something that David Goggins talks about in his book, Can't Hurt Me. But one of the things that I think is true, not just physically, but in all areas of life, mentally as well, is he had this statement: when you think you are just done physically, you're actually only at 40% of what is really capable, of what's truly possible physiologically, right? Because our mind can play tricks on us sometimes. And so I know that that was a lesson that I learned doing the Ironman, is at some point you're just exhausted, but you know what? You press in and press on. And most people don't or won't. They think they can't, but they don't. And I think that happens in business too. It's like, oh, it's too hard. I'm going to, check out. And so anyway, I can't remember what it was, but I think it's, it's like the 80-20 rule, and then the 80-20 of 80-20. Only there's a cutoff of 80% of the people only go so far. And then there's another group, which is 96% will get to a certain point. And then there's the 0.8, it's called 1%, that will find a way to win no matter what the odds are. And I think, so that's where my attention goes.
Oh, that's great. So obviously you've been doing this for a while, and clearly you had an excellent role model in your father, in watching him come from, a modest background to working hard and learning and becoming the person that he ultimately was destined to be, and reaching that potential. And, it's pretty rare to have someone in your life like that. But I'm curious, and it might have been your dad that gave you the advice, but I'm curious what was the best advice you ever got, and who gave it to you?
Oh, that's a great question. The best advice I ever got, what comes to mind as you say that is that I think one of the secrets in business is it's not just work hard, but it's a combination of a whole series of things. It is what it is times who times how hard you work, but also times how much of your time is spent in an area of strength and genius. And what's fascinating to me is that, we have, you think about it, there's 7.9 billion people on this planet, and every individual, there's a streak of genius in them. There's something unique about them. And I think that when we can take our individual strengths, which we're naturally wired to excel at, that our friends or family would say, this is where Ed just runs circles around people. And you can do that 80% of the day in an area that you love, in an area that's bringing value to the world, and also in an area that will pay you for your efforts. That's the sweet spot. Okay. And so that's how it all fits together.
Yeah. Oh, that's amazing. And so is that something that you've learned over time, or did somebody put that in your ear, or both?
I had an uncle, my uncle, years ago said something along those lines, and it was, it's not just what but a lot of life is who you know. So I never forgot about that. And I've had some really good coaching and mentoring over the years, in addition to listening to my dad, that helped me to get really clear on where my unique strengths were, and what was, there's a Les Brown saying I heard one time, which is, everyone is born unique, but most people die as clones. Like, for whatever reason, a lot of times people start to just gravitate toward the mean, as opposed to stand on like their unique genius and identity, whatever that is, because it's uncomfortable a little bit. So, that's one. And then the other thing that comes to mind is that, life can be rough. And I think that for a lot of entrepreneurs, everyone starts with big dreams, but very few people truly like press through, and most end up like, oh, I'll just go get a job, and they quote, settle in life, so to speak.
So
and I think life is supposed to be just the opposite of that. But this was the saying. It was, most people die at age 25, but they're not buried until age 80. Right. So the dreams die. And so like my thought process, and something like I want to instill in my kids, is life is a great adventure.
Yeah.
Like, it should be endless adventure that should be fulfilling and fun and profitable, and you bring value. Like, there's just so much there. And I think so often, like, people can get jaded too fast. And I'm extra careful to guard against that.
Absolutely. I was talking to a friend of mine the other day, and he, super smart, has embraced his highest and best use, and ran a software company, and grew it to a gigantic size, and then, had the good fortune to sell. And so, and he's a young man, right? He's 53 or 52. And because I'm older than he is. We were talking about the concept of retirement. And, he said to me, he's like, Ed, I am 52 years old. I have minimum 30 more years on this earth, and I still haven't even figured out what I want to do with my life. Right. And that curiosity, that, that feeling that, I'm not done yet is something that, drives a pretty small slice of the world. And if you can figure out, I tell people all the time, I'm 53. I don't know what I want to do, for the rest of my life. I haven't figured it out yet. Real estate is what I'm doing today. And I'm going to do it for a while, but I guarantee you that I've switched careers 3 times so far. So, and, I'm sure, obviously just looking at LinkedIn and our conversation here, I mean, you've done the same. You've done a lot of really cool things for very different organizations and companies. So getting back, let's talk history for a second. Okay. So
Sure.
if I took a magic wand and I wiped out everything that you've accomplished, right? You can keep your knowledge, you can keep your family, you can keep your network, but the stuff, the money, the bank accounts, the fund, all of that wiped away. What would you do to start over?
What would I do to start over? I've actually had this exercise with my kids sometime. If they had to land in a random city with, out any money, how would they get, survive? So, what would I do different? I feel like I can do in 5 years what it took me 15 to 20 to do if I had to do it over. So, and the level of certainty that comes with that is so high that it's just not even a question.
Right.
So it would immediately be, I've read a fascinating book. I've read it a couple times now, but it's called Who Not How by Dan Sullivan and Benjamin Hardy.
One of my favorites.
No relation. Okay. So, a lot of it comes down to this is my belief is that like one new idea or one new relationship can change the trajectory of your life. And it's like the acres of diamonds thinking.
Right.
And so again, there's endless opportunity everywhere. So for me, it comes down to who are the people that, number one, will give me the opportunity, and I don't want anything handed to me, but that will give me the opportunity, if I'm answering your question, to be able to have a running start. And I'm like, okay, cool. I know I can run. And how do I help this person win that's giving me the opportunity at the same time?
Right.
And as part of that opportunity, will that person open their network to me? Because I'm a believer in transfer of trust.
Yep.
And so for me, it would be very quickly establishing relationships with folks that are at a very high level that need my wisdom and perspective in exchange for, whatever it is that, they could help me get started with. But that would be a way to fast track, and it would be, a 5-year game plan. And it's, it's kind of a fun exercise now that you're saying this. I haven't thought about this for a little bit. So
yeah, it's interesting. I read a book. It was actually during COVID. Russell Brunson created it, and one of the things he did, digital marketing guy, and one of the things he talked about, it's if you lost everything, and he went to his customers who were very successful and said, all right, you lost everything and you got 30 days to make your mortgage or your rent and feed yourself, what would you do? And it was an interesting conversation because you're talking to people, he's talking to people that are, selling coaching and real estate and supplements and, all these different, wildly different things. And a lot of them were talking about, certainty is certainly one of the things that I think you and everybody that was in that book that I was reading, shares. And the other part of it is that, keeping it simple, man. Right. Fortunately you can't unlearn the stuff that you've learned over the last, 15, 20 years. So, you get to bring a much bigger tennis racket to the game, when they ask you to, step back on the court, so to speak. So Mike, I've really enjoyed this conversation and thank you for the education. I'm grateful. So when you're not talking about real estate or, what do you enjoy doing? How do you spend your time?
Oh, that's great. I'm a family guy. We have a place up in Big Bear Lake that we get to quite a bit. I'm an adventurer and, athlete through high school and college. And so I really stay on a lot of things up physically. I've been going through and doing the 75 hard challenge again, if you're familiar with the 75 hard program.
not.
And in fact, I like to, oh, so the 75 hard is interesting. So I'll give you the cliff notes on it. It's 75 days of 2 workouts a day, 45 minutes each. One of them needs to be outside.
Okay.
Drink a gallon of water. That's why I'm drink a gallon of water each day. You have to read 10 pages of nonfiction, which is pretty easy, but still it's daily.
Yeah.
You have to take a picture and upload it into the app. Doesn't have to be like, posted anywhere, but just so you can see the progression over time. Let's see what else. And then no alcohol, no cheat meals, follow a diet, and do that for 75 days straight. And so like challenges like that, my entire, my mortgage group, a whole bunch of us are doing that all together. So I like bringing in challenges personally and like integrating it with business to improve and build, culture and fun. But so anything that's outdoors, that is a challenge, that's challenge oriented, love all that stuff. So that
cool.
complemented with real estate.
I'm going to check that out. That's interesting. All right. And it's always better when you do it with somebody else, right? Because you're holding each other accountable. And I'm sure there's little side bets and money exchanged at the end of it. And, just to make it interesting, right?
That's right. Yeah.
I got $1 says I can do this, better, faster than you can. So Mike, thank you so much for your time today. Hey, so if people want to learn more about, get to know you or contact you or learn more about the Opportunity Zone Fund, what's the best way to do that?
Sure. No, absolutely. There is, I would say, to reach out directly, Mike at cyrusozfund.com is my email address. One thing I didn't mention earlier that's super important is that if somebody has a busted 1031 exchange, it does not need to go directly to an accommodator. So they can actually have possession of the gains for 180 days. And then as long as it moves from their pocket into a qualified opportunity fund before day 181, it's eligible for this preferred tax treatment.
Wow.
So looking backwards, so any investor can look backwards up to 180 days. And we have openings in January and in July. And then if someone needs liquidity for whatever reason, they can have, there's an off ramp in January. So every January. But what most people realize is, I think about 10 to 15% of 1031 exchanges are busted for some reason. That person can take their basis back, invest only the gains, but look back 180 days and still be eligible. So we didn't get to cover that, but that's a key benefit.
But it's a great safety net, right? Because stuff happens.
Great safety net.
Right on.
Great.
All right.
Yep.
Well, Mike Hardy, thank you so much for your time today. Thank you for your wisdom, and I appreciate the lesson in opportunity zone investing, because I feel like I'm a little smarter right now than I was 40 minutes ago. So thank you.
Awesome. Ed, it's been a pleasure to talk with you and get to know you. Thank you so much.
Yeah, thank you.